Hi, I'm Andrew Roach. In my last video, I showed how I created a dynamic summary income statement to show it at a category and account level based on a selected dropdown. However, this did not include calculated metrics such as gross profit, EBITDA, or net income. In this video, I'll show how I went about creating a table to calculate those metrics in a way that can be incorporated into the dynamic summary table as new data is added with the close of each reporting period.
First, I'm going to create a table to calculate my derived metrics. We'll use unique function to bring in the unique combination of accounting period and fiscal year. And then use the mid and left functions to parse out the accounting period. And then use the right function to derive the fiscal year. Now we can start calculating our derived metrics, first by using a SUMIF statement to calculate our revenue, and then to use a similar SUMIF statement, but modifying the reference to cost of goods and services to calculate our gross profit. Now we'll calculate EBITDA, taking our gross profit and subtracting our operating expenses. We'll use a similar SUMIF statement. Now let's take the formula we just created in column E and copy that into column F and update the references and include depreciation rather than operating expense. We'll repeat that same process for the two remaining calculations. The next step is to create a new mapping of my category and account structures that incorporates the calculations that I've just performed. This will allow my dynamic summary income statement table to incorporate these calculations in the order that they appear on a typical income statement. Now that I have my category and account headers in place, I can build my flattened table where all the values for the amount are in a single column. And I do this by using the flatten and split functions. Here I'm referencing each set of data that I want to represent in its own column and separating it by the vertical line, which will be used by the split function to create separate columns. And here in the array constrain argument for the rows, I'm multiplying the count of the rows by the count of the columns because that's how many rows we'll need when each of these columns are stacked on top of each other. And the number of columns I need is equal to the number of ranges I have in my flatten function, 6. In my next video, I'll show you how I bring this table into my master sheet so that it can be incorporated into my dynamic income statement summary table.